Well, hello there, everybody. It's Market Roundup time. Joe with you here. It's Tuesday, February 18th. I hope you had a good President's Day weekend. I know it went by pretty quick for me. You guys know how this works. I've got some things to share. Just take responsibility for the outcome. Let's take a look at some stuff technically. Things have changed, by the way. We'll take a look at those. Also, let's see if we can't find some trades to share with the community, as always.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, folks, I got kind of the day that I expected, actually, when it came to Friday's close. Let's go ahead and take a look at how that was. We finished flat. Coming out of the holiday, I wasn't sure what we were going to do over the extended weekend with policy changes. There's always that kind of area of, oh, geez, what's going to happen next? But the markets, they kind of pushed and pulled, but basically finished flat. We'll get there in a second. But gold continued a pretty strong, steady stack higher. It's up around that 29.50 area. It's starting to climb. It could just be a little bit of worries there. The dollar didn't really get punished too much. I mean, it did slide a little bit, but it wasn't like it was collapsing. But gold definitely had the most activity. At least that's kind of what I noticed. How do we finish overall, though? Flat. Look at that. Dow, S&P, Qs completely in line with just where they were. I mean, they were a little lower, a little higher. The S&P actually pushed a little bit towards the end of the day there to close at 0.24, but I'll call it flat. The Russells as well, about 0.5% up. But oil up and then gold up. 1.8% is where it was at. 1.74 is where I pulled it from. So that's about it. Now, it is just one day coming out of the holiday. We'll see where we go. Advanced decline line, 57% advancing, 40% declining. Above below the 50 moving average, still playing that glass half full, 63% versus 37. So it is bullish nonetheless. Like if you were to take a step back and just shut everything off, everything's kind of moving higher, right? Advanced decline line looks right. Above below looks right. This move higher that I talked about on Friday, which was an absolute confirmation of a flag pattern breakout, has continued to confirm, and it's kind of what I expected. It should float a little bit. Maybe it comes back and retests, but now we've got something a little bit more significant. This is an ascending triangle pattern. Folks, you know how much I like these. Ascending triangle pattern, it's in the right spot. Everything's flipped. The economy looks solid and stable enough, but we still have some unclarity in the sectors. We're on our way out of earnings season. We can figure that out. What I'm seeing here is just an ascending triangle pattern that shows a little bit of strength. Today's candle, once again, coming off of that low to close up there, is a little bit more optimistic. I don't know if we just continue to shoot higher without some sort of catalyst or stimulant, but being up here has definitely got me towards the bull side. Let's take a look at the Qs, because this one was a little bit stronger. We're already kind of at that level, and how volatile they are and how hard they push, I'm not surprised. So the idea was, hey, here's the candlestick that we were looking at. It does show some strength. Not a lot of volume behind it, but it kind of floated up there. Is it going to pull back? I do believe it will. I think that maybe a pullback to this area or consolidation, just based on how volatile the Qs are and tech itself and all that fun stuff. But overall, it is still definitely on the bull side, at least a +2, based on where these averages have come. So let's just get into the heat map, and you can see it's a little selective. Some things that I thought was interesting is I wasn't sure if everything was going to go red or green, but we did get some big impacts. Meta's a big one, right? United Healthcare is a big one, and it did carry down some of the larger sectors. However, overall, I saw some very good strength here in energy, right? We got some strength in the utilities area, the basic materials, which is kind of funny because it was almost exact opposite on how we were for the week previous. A lot of communications, technology was the strongest last week, if you guys remember, and consumer cyclical. Well, guess what, folks? It's a little bit different as we enter today. Now, it's just one day, but I thought it would be kind of fun to show you this. Look at that. Energy, basic materials, utilities. I know financials would be up there because my financials are pretty stable and pretty strong. And But, technology kind of in the midst. Communication services, I have to throw it out because it's one bad announcement from a giant stock and it can pull on it. But it was very interesting to see some of these defensive sectors pop up. Maybe it's got some sort of correlation with gold, who knows? But overall, it really didn't affect the markets. It was a sideways day, which kept a bullish pattern. So let's take a look at it. Here it is. I'm a +2 for the weekly outlook. It's above the 20, above the 50. The slope is great. I mean, if you take a look at this, it is definitely just pushing above resistance there. Ascending triangle. I got to be a +2 on the monthly outlook. Once this confirms higher, I got to put that to a +3 on the monthly. But the +2, I just think that's kind of where we're going to go. Now, when it comes to individual sectors and it comes to individual stocks, not so much. It's crazy. It's very interesting to see the performances of the majors versus some of these individuals. Because what I have found is some very, very weak stocks and some what should be stronger sectors. So what do I have? Decided to throw out, or sideways market, I should say, decided to throw out at least a couple. There's that Bank of Mellon, the Bank of New York there that I do like. It did trigger, but of course it triggered well past where I wanted to go. I'm going to see if I can't work myself into that. Sideways, I've got Mosaic back on there, as you can see, as well as the BE trade that we talked about, which I do like. Bristol Myers on the bear side, and then take a look. Chipotle, we've got Campbell Soup, and then CNC all on the bear side. So let's take a look at the examples that I have for you. This is the Bank of Mellon. Anything in the financials that looks like this, I think it'd be good. It might have raced on us. I was thinking, hey, if it could just stay up here and just maybe go sideways or give me just some sort of a red candle would be nice, but it decided to continue higher with increased volume. I think 92 was our extended target. 90 was kind of that butterfly area. I might shoot for that depending on what I see in this tomorrow, but it's still a very strong pattern overall. Now on the sideways group, that BE still looks pretty good, but I just wanted to jump straight down to Chipotle because there are a few that look like this. And yes, folks, the other ones that I suggested as well are very, very similar. So take a look at it. Things that just fall out of favor, they fall out of favor very, very quickly. So this is Chipotle. I zoomed all the way out so you could see it's actually below a level that it had been in November of last year, but I do like the increase in the volume. Now, we're trying to jump in and chase this, but let's see what it does over the next little bit. But it's been falling out of favor. There are a lot of bear trades out there. It was very interesting for me to actually see that energy was so strong and utilities, and I've gone through those sectors with you guys as well. And there's some really, really bad stocks in there. So the major markets are into the bullish territory on a technical basis. I talked about this for a little while, and I really haven't changed my tune. I have been a +1, +2 for a long, long time, but I can't make heads or tails, folks, of these sectors. I know that earnings has had a little bit of a play on that. So sectors continue to sort themselves out. I'm just going to keep that out there because I'm finding very strong, very weak. It's kind of favoritism almost. So it's just going to do what it does. But some of the trades that I've shown you, some of the charts that you see that are similar to that, they continue to get beaten down or continue to move higher. So there are trades to be made. We've got FOMC minutes, unemployment claims, manufacturing services PMI. I think that's about it. Now, the FOMC minutes, I made mention of that on Friday. That's going to be Powell coming out and seeing what he's looking at and saying it's not a Fed announcement. It's just, this is kind of where we're at. We might get some reaction. I'm just going to put that as like a little bit of a, hey, this might be interesting, more so than a major event. Past that, we do not have much economically for this week. Earnings season is winding down, but understand there's still some out there. Always check your potential trades. It's going to have impact on it. But boy, it's been a little bit interesting over these last month or so, but there are trades. If you believe in the ones that you're seeing, stay thin, stay slow, stay small. A lot of my trades are half positions, and as far as 10 to 15 trades out there, not even close. I'm more of a 5 or 6 guy right now. At most, it's just not worth it for me. All right, folks, thanks for joining me once again, and guess what? I'm going to see you tomorrow. Bye, everybody.